Welcome back to U.S. Farm Report this weekend here from the Milk Business Conference in Las Vegas. A lot to cover on the program for our marketing roundtables. A great group lined up today. Dan, let's start about talking about the decision this week for the Fed to raise interest rates. We knew it was coming. It was kind of right on par with expectations. But do you think that we will continue to see those interest rate hikes as we head into 2023?
Yeah, Tyne, as we look at today, they raised it 0.5%, so we're 50 basis points. We're now at 4.25 to 4.5, and the Fed indicated that it will continue to raise rates in 2023. No easing or pause from their perspective till 2024. I'm not sure if that's 2 or 3 more increases, but I think it's in that space, and so we're going to get rates up to somewhere between, let's say, 5 and 5.25 before they pause. I think the next rate increases will be 1/4, not 1/2 or 3/4.
Roland, what is Rabo AgriFinance's expectation as we look at interest rates into the new year?
Yeah, our house estimate's spot on with Dan's. The consensus at Rabo is that there'll be 2 25 basis point hikes early next year, and then the Fed will see how that shakes out. I can tell you that's kind of a consensus. That's a consensus estimate. Not everyone agrees, right? We definitely, and Dan alluded to this. Some of us see the opportunity or the chance that there might be a third 25 basis point hike as we get to mid-year.
Yeah, and you look at how those hikes are impacting producers in the room. But Mike, you look at inflation too. It has been amazing to see domestic dairy demand not waver much, even with inflation and the impact on the dairy aisle.
Absolutely, and that's one good news story for dairy is that as consumers have traded down away from maybe going out for a really expensive steak and still ordering pizza, that we're still in the mix. And consumers have continued to fund part of their lifestyle with greater debt loads, but that doesn't seem to have slowed them down in any capacity. The real question will be as we come into the new year, how do we move through the quote-unquote retail hangover of January and February, and how do they respond in their spending habits?
Yeah, but Dan, today, is there an explanation on why dairy demand has been so strong and consumers haven't backed away from some of those products at the store?
It's not only strong, it's record large. I mean, we are looking at a bangbuster year, 2022, in terms of dairy demand. And I think it's based on all the cash that was out in the system and that people still had some leftover from COVID payments and everything else. It's going to take a while to bleed that off. I worry more about the middle of next year in our work, but as I think about it, I don't think that dairy demand is going to suffer all that much.
Yeah, you look at things like McDonald's and their sales this year, and talking to DMI, McDonald's, 80% of their menu includes dairy. Great news for the dairy sector, but as we head into 2023, Roland, are you concerned that dairy demand domestically can keep this pace?
Well, I think we have to at least keep our eye on it, and we have to have some concern, but we still think dairy demand is going to be very, very robust in 2023. We have to especially keep an eye on the second half of the year where Rabobank's calling for a U.S. recession. And we know real incomes have continued to go down. So, yes, we're keeping an eye on it, but again, we're a global player in this dairy deal. And when you look at the globe, we think overall dairy product demand on a milk solids basis is going to stay pretty robust in 2023.
Mike, if exports can hold strong, even if we see dairy demand domestically come down a bit, what impact could that have on milk prices?
Well, obviously, if we see strong exports, that's a bonus to milk price all the way across the board. But to build off of one of the things that Roland was touching on, one concern we do have is with European consumer demand and how that's going to play out, because we all kind of essentially pull from the same total pool. And if all the high energy prices and the major headwinds they're experiencing there have a big impact on their demand, that could ripple backward and cause a little lesser export demand on our front. So, that is certainly something we're watching, but if we can pull off strong exports, that would be great.
Well, the strong U.S. dollar hasn't impacted exports in a big way so far, Dan. So what is your expectation when it comes to exports for the new year?
We think exports stay strong. We would say that when the Fed gets to the point that they're going to pivot the next 2 rate hikes, that the dollar will start to drop based on the debt that the U.S. government has assembled, maybe $31 trillion today, Tyne. So as you think about the future, the dollar starts to come down. We're actually optimistic on exports. And to the EU, I've got their cow numbers coming down, so I don't think they're going to be the bigger export potential that they've been. So all in all, I'm generally optimistic. record beef prices also pay into this because as a consumer trades down, he's going to look to dairy rather than, let's say, steak or hamburger.
All right, well, we're expecting a monster crop in South America. Is that the case? Also, we need to navigate the turbulence happening in Ukraine and what that means for global grain supplies and the impact on grain prices and feed prices. We'll do all of that, but first, we need to take a quick break, and then we'll have much more right here on U.S. Farm Report.
Your next piece of equipment is on MachineryPete.com. Search equipment from dealerships across the country to find what you're looking for. Only on MachineryPete.com.